On behalf of the Entrepreneurship Development Cell of St. Xavier's College, Kolkata, it is with great pleasure that I extend a warm welcome to each one of you to the opening ceremony of Enterprise 2024, an inter-college corporate simulation. It is with utmost honor, privilege, and gratitude that I introduce to you our visionary leader, Ms. Harshita Sabharwal, the Managing Director of Accenture, who graces us as the distinguished guest speaker for today's session. Ms. Sabharwal brings with her extensive experience, having served as a former associate partner at IBM. Her adept navigation of the corporate landscape has left a lasting mark on every endeavor that she has undertaken. We are beyond delighted to have you join us, ma'am, and relay your experience, expertise, and journey to curious young minds. We are extremely thankful to you for taking time out of your busy schedule for a session with us. On behalf of everyone at EDC, I extend my best wishes to all the participants for an insightful learning experience during this session. I now hand over the virtual podium to you, ma'am.
Thank you so much, and thanks for this introduction as well. It's my real pleasure to be here with all of you, and as you rightly mentioned, with the curious young minds who are going to build the tomorrow for us in this dynamic and changing world. So before so I did get some topics and pages which the team wanted me to present, but maybe I'll start with a little bit of my journey and my introduction, and then we can dwell into the topic as well. So, in terms of my career, I started, and like you have Xavier's College in Kolkata. I started my education, my I would say my college education with Sri Ram College of Commerce in New Delhi, which probably most of you would be aware of. And then I went on to do my chartered accountancy with Pricewaterhouse. I articled with them, and my first real job was with Nestle. So I spent about 9 years with Nestle, different roles, a very, very insightful experience, if I may say. And working with a consumer products company at the beginning of your career, I think can really help you understand how the whole machinery of a business works. And it's really not just about learning finance, it's understanding the um, whole business and the company and the layout. I would say Nestle really helped me to achieve that. From there, I moved into a company called Delphi Automotive Systems. Maybe some of you have heard of it. It's a Detroit based company which does backward integration into various automobile parts. So I served as a CFO for one of their business divisions. And again, very interesting because I got a lot of exposure into manufacturing. And again, I would say that if you get to roles and when you start working, if you do spend some time at the manufacturing side to understand how things work, even for us people, who are from finance, how the costing works, how the assets are secured, the everything about the manufacturing process can again lead you into becoming a very successful top leader from finance because you will understand the realities of how a process works. And it's not just about a costing calculation. From there, I moved to General Electric. So I was a controller, financial controller for India with General Electric. Again, I got experience into multiple kind of projects, including how is it that you can improve controls, compliance of an organization which is so diversified. In India itself, we had more than 40 legal entities. So it's a challenge, but again, very, very interesting. From there, I joined IBM, and with IBM, I was leading the entire center for Gurgaon, and again, also relationship partnership I did for multiple clients in Europe and in the US. Now, currently, I'm with Accenture, really enjoying myself, been here for a few years already, and we are getting, I would say that all my experience in the initial years in the consumer services, consumer product space, as well as in a diversified industry, is really helping me advise my clients. So overall, So just a few things which I like to mention to all of you. One is it's always good to have a diversified work experience. So try to find new roles, even if you are in the same company, try to do something different every few years. It really opens up our minds. It also helps us understand how the world is changing and how we need to adapt to stay relevant. Because in this changing world, even if I talk about myself, my education mid 90s, where we would go for the audit, and we would actually have physical books where we would check and provide our audit comments, is a historical event in itself, right? So if I do not upskill myself to the latest technology and understand the new ways of working, I'm going to soon phase out. So that's really important. Keep learning on every new job. I think it's always good to get out of your comfort zone. As soon as you feel you've learned enough, try and do something new. So, with that, I'll dwell into the topic, which is a very interesting one for today. And thank you for providing me this topic. Very, very relevant. And we need to look at what is it that finance means beyond numbers. And we are not about numbers anymore, right? So, it's initially, and probably some of you would have heard, and like maybe about 20, 30 years ago, an accountant would be called as a bean counter, that you'll just do your ledger books, you will report, you'll ensure compliance, you'll manage the auditors, and go home. And that's it. You don't run the business, and you're not even privy to most of the business decisions which probably would be taking. From there, the world has really changed. And maybe we're going to spend the next 45 minutes or so to deep dive into what's changing and what is it that we in finance functions do much, much beyond numbers. Numbers are automated. Now we need to change the game. Okay, I'm going to try and share my screen. Otherwise, I sent a document. If you can share it on screen, it might be easier for me, considering we had some technical challenges.
Yes, ma'am, just give us a moment.
Sure. So while the pages are coming up, you know, it's such a okay, we can go to the next page. So, we'll just cover a little bit about how the role of finance leaders has evolved, like I was mentioning. We'll talk about data and technology. I think this is becoming the foundation of whatever we do every day. So, very, very important for us to be aware about this space. Sustainability is the next big thing. In fact, the Accenture CEO, what she's been saying in media is that sustainability is going to be the next digital. So, like we had a digital revolution, sustainability is going to be the next most important thing for the world. And then we'll talk a little bit about what is it that we can do to succeed in this ever changing space. Okay, let's carry on. Okay, yeah, we can move. So, basically, the future of finance is about these five levers, if I may put it there. One is about that the finance professionals are expected in the companies to drive efficiencies to help reduce cost. Because the top line is what it is, but we need to continue to find ways and means across the organization to reduce cost by transforming, by finding new ways of working. And this will ultimately result into our contribution into profitability. Initial days, we didn't have a contribution in profitability in terms of enabling it. We were probably just reporting it. So that's the difference. Other is the value driver. So when you talk about various initiatives in an organization, be it on the sustainability space, be it even a change in a manufacturing process, there's a lot of value that a finance professional brings, primarily due to their knowledge of the entire framework of the company, because you are privy to most of the numbers, you understand what's going well, what's not going well, and hence with the power of data you are able to create that value and provide the right path to the organization. So that's the next. Third is the talent. Like I was mentioning, the finance professionals of today have a lot of knowledge on data, artificial intelligence, and hence are able to partner on projects which are beyond their limited scope. So I'll give you some examples as we move along, but there is a lot of opportunity for finance people beyond numbers to look at these projects, work on them, and make an impact. Automation, most companies are trying to make their mundane, routine, repeatable processes completely human free. We play a role in that. And those processes, please remember, are not just finance processes, they again cut across the entire organization. Okay, so this is just some of the levers to introduce and to start off the discussion. And if you have any questions, please park them. We will have some time at the end to answer those. Let's carry on. Now, what I have over here is some of the comments that we keep hearing from our CFOs and other senior professionals in the space as to what's happening and what is it that we need to do to make a difference. So, one is the challenges. There is a lot of interconnected transformation which is required. The organization tend to become disconnected and siloed in absence of bringing in the network and the thread of data and technology together. So, from the time, let's say, a product, a raw material goes into the factory for manufacturing to the time it is sold, we can create that entire process of helping with the interconnection. Other thing is that information still, and you will be surprised, even for the Fortune 500 companies, we tend to see that a lot of information is decentralized. I may have it because I need it for my job, but ultimately, we again as the finance teams are helping bringing that data together so that everyone can use it and it's available real time at the point where you need it. Okay, so other things, lack of data availability. Data is not finance numbers, right? Data is a lot of ancillary numbers that you need. So we need to look at how to work through it, how to reduce manual effort. I spoke about driving value. I've put specifically a few points on ESG because ESG data is becoming the next big thing. Uh, just to give a couple of examples here, when we talk about ESG data, we need to also record how many miles the employees travel for work so that we can calculate the carbon emission. We have that data because we have the employee bills. So we use that to extract the information for ESG so that certain decisions and targets can be enabled. I'm just giving you some examples as to how things are getting interconnected. So basically, these are just to give you a sense of the kind of challenges which are coming up and where is it that we need to and are expected to add value. 90% of the CFOs in the world today are making business critical decisions. And when I say business critical, they're working very closely with the CEOs to look at what's happening in the company and support them with those decisions. And they're driving value realization. And most importantly, we're looking at how is it that we can make most of our data real time. I'm working with my clients to work on enabling this as well. Okay, let's keep going. So some of the challenges, I already spoke about it, but to reiterate here, it's a volatile and uncertain world in many, many ways. We have hyperinflation, we have a war situation, we had COVID. Those are, of course, the external factors, but the volatility is also driven by the fact that there is such huge change in technology and that also on an ongoing basis. Every 6 months, 8 months, you see a change and you need to be coming up to speed to make sure that the company is on board and does not get left behind. So this is the biggest challenge that we face today, which we need to resolve. Complex technology landscape. So we have multiple systems, especially when the companies grow inorganically. There are acquisitions and mergers. So the acquisitions come with their own set of technology, right? And it's very difficult for a company to, let's say, convert them into their own very quickly. Sometimes it can take years. I'll go back to my example of GE. Like I said, we had 40 legal entities, out of which 16 were acquisitions. And we continue to work even on redundant softwares like Tally to do accounting because it was so hard to bring them on the mainstream. So it becomes that complexity that we need to deal with and work on beyond uh, beyond our regular routine roles. Data fragmentation, I think we spoke about. We have to convert data into a common language, which we all understand. And, the financial language, I would say, which can convert into dollars, which can convert into numbers, which are easy to explain and to take decisions on. And the work of finance is changing, I think, and that's what is the whole uh, presentation about. But very few C suite leaders still are understanding the whole change, and there is a need to explain and work with them so that they enable the finance professionals to ride on this wave of change and make it a success. So these are just some of the challenges and the environment in which the finance leaders work, and we will address them as we move along. Hey, I'll just need to take a 1 minute break and I'll be back. Huh? Just give me 1 minute. So basically, if you talk about our new age finance leaders, there are three things that we need to do. One is we need to decide and decide fast. Second is control. We have done that in the past, but with a difference. And then lead. We have led finance teams, but now we need to lead the entire organization. So when we talk about decide, we need to take fast decisions. We need to facilitate fast decisions. And how do we facilitate fast decisions? Is by understanding the business and by providing the right insights of data to our various teams to be able to get to the right decisions and also push and enable them. So we become from an accountant to a strategic advisor, with considering that we are custodian of most of the transactions of the company and hence are best placed to be that strategic advisor. Second is control. So control used to be a support role. So, when I was a controller, it was like, okay, make sure that the reconciliations are done, the book closes in time, it's accurate, and it's as per the accounting standard, etc. But now the control is a more proactive role. We need to see what can be avoided by being more predictive in our approach. So that's the difference in the role of control. Lead. So, new ways of working, like I said, we're embracing digital across the organization. And hence, even our leadership is not just about managing what we have in our function, but leading the whole organization. Okay, let's keep going. So I just wanted to add this quote there. So when you decide, we have to decide wisely. And to be wise, we need to understand the data and we need to understand the business. So that's one thing which is very important for the finance people to be aware of. We need to control and assess. Assess a situation. Assess how is it that it can be prevented. And lead not just our own teams, but lead everywhere. So this is the framework. I'll go into a little bit of detail now because to understand our journey from the traditional finance to being a value generator. So there are certain categories which you see on the left. So we'll start with the role of a traditional finance professional. So it was financial stewardship, it was custodian of data, it was gatekeeper to make sure that your auditors were taken care. We were making sure that the compliances were all good, etc. And that was it. So if you've done this, you're home, you're doing well. From here, we evolved to a business support role where we got more chance to work with our business units to provide them information, statistics, etc., which would help them to take their decisions. It was still a support role. Then we became a partner. When we say a partner, that we would provide and we would enable. So a difference. So I would tell you something, but then I would also tell you what it means for you and what you should do about it. And if you're not doing what I'm telling you, then we need to have a discussion. So that's the partnership role. From there, I think today we are a value generator. And the reason we said this is that we are architects for the entire enterprise, primarily due to the technology intervention. And we also need to run and invent in parallel. So we're running the company, right? We have to do our basic work, but we also need to keep on reinventing. Remember what I mentioned on page one, because we have to bring in more efficiencies, we have to create impact to drive profitability, and driving profitability will ultimately result in growth. So this is the change in role. So if you really see the first box to the last box, it's a completely different requirement. Financial stewardship, etc., is now a given. Most of it is automated. Maybe I spend 10% of my time as I used to 20 years ago. So the expectation is to create more and more value. Let's talk about structure now. Initially, 20, 30 years ago, the structure of a finance team would be independent business units. They would have their own finance teams, and there would be a controller and there would be a CFO all working together. This would be the typical structure. As we moved into a business support role, we got embedded into business units. So I'll give you an example. In Nestle itself, and I would still say they were forward looking. So I was embedded in the entire sales organization as a controller to see what they would do. So this is an embedment which results in a support, providing support. And then centralized expertise like tax treasury, because this is something which is very niche and it needs a lot of skill. So to leave it decentralized, sometimes you tend to miss out on opportunity. So this is what happened at the time of business support. When we became a business partner, the delivery of transactional finance went to a shared service, and we became more and more planning, treasury, tax planning, etc. So that was the partnership role. From there, of course, I think we have discussed Now we are providing strategic decision support, and we are getting into very sophisticated analytics. So that's our role today. In terms of the process, traditionally we would have inconsistent policies, very fragmented processes. People would work the way they thought was best. If you're in a role for 20 years, you've decided that this is the best way to work, you'll go ahead and do that. From there, we moved to a standardized global process. We got policies in place. But when we went to a partnership stage, again, digitization was introduced, low touch processes, ERPs, implementation. We became very, very actively involved in the ERP implementation. It was not an IT role at all. I've myself done Oracle implementations, I've worked on SAP. So it is very much something where finance plays a lead role. Now, of course, we are looking at how to improve forecasting accuracy, how to make it more predictable and cognitive. Technology, ad hoc, multiple ERPs, not integrated. From there, now we are looking at advanced artificial intelligence. I'm sure you've heard of generative AI. We are working on that as well. And then looking at cross-functional integration. And when I say cross-functional integration, what I mean is integrating a sales to a procurement, to a finance, to a sales, to the organization. That's what the cross-functional integration would be. Data initially used to be fragmented. I myself dealt with it in late 90s. It would be available in different places, in different shapes and forms. From there, we have achieved the journey where we have a data-driven culture. We have access to data as we need it. So, again, we have enabled it in a way that you have it when you need it and the way you need it. So it's a huge difference from where we were. People had traditional financial skills. Today, we see them coming from multidisciplinary focus areas. You will see that, people from technology will join finance, others. So now these teams are more holistic and comprehensive. So this is our journey from where we were and where we are today. And of course, there's a huge journey forward where it looks like that the entire finance and transactions are going to become completely touch free or no humans required, and then we'll look at a completely different space, and I don't see that far away. Okay, let's keep going. And I just kept this page to give you a sense of even on the reporting side. So as is what we used to do in the past is we would transact, account, control, and comply, and then report. So these were the 5 steps. And the reason it's grayed out is that now what we need to look is we need to run, analyze, and advise. And rather than just reporting the numbers on actual performance, we need to drive value through evaluating future performance and reporting for the stakeholders. Because past is a given, that's something mostly automated. So what we need to work on is the little green band that you see at the bottom of the page. Okay. When we talk about the data foundation, so unless and until, it's always garbage in, garbage out. So unless the finance professionals are able to create that strong data foundation, which has the right level of discipline and governance, we will not be able to go very far. And once we have that, it's so powerful that it can create huge level of insights proactively, alert mechanisms, taking decisions on new businesses, and you name it. And what we can lead this to is one is on the interactive reporting. And when I say interactive reporting, it means near time financial data. So let's say, and I'll give you an example. We're talking about a concept of continuous accounting and reporting with a client. What it means is that continuously, as and when a transaction is done, it gets into the system and I'm able to see my revised profit number. Just imagine a situation like that. So once you have this near time financial data for immediate consumption, the business executives can look at their portfolios, they can look at their relationships with their vendors, with their customers, their metric, their performance, and take immediate decisions to optimize their working capital, to optimize their sales, etc. And this is the power which we need to bring and we are bringing on the table. Machine learning based, I'm sure you have heard about it. We have to enable it faster. So machine learning takes its own sweet time. So there are ways and means of enabling machine learning for transactions quickly and effectively so that again it becomes real time and we are able to build those statistical models to get to this target. You might have heard of reforecasting. And why do we need to reforecast? Primarily because the first time we forecast, there could be errors. Maybe the future is unknown, and then we need to go and do a baseline again. You must have heard of zero based budgeting. So we have to do zero based budgeting in situations where we think lots has changed. However, because of applying this analytics and insights and using advanced algorithms, we want to be in a situation where we only need to reforecast by exception and not the entire piece. And this is going to again help us optimize the performance and provide leadership with details which are outside of let's say a 6 months or a 12-month horizon. This is what I had on data foundation. We can keep moving. Generative AI, and this is an area I would say even I'm learning. It's new. I'm sure you've all used Chat GPT. It's pretty intuitive. You can ask it to do a lot of things. Of course, it has its own shortcomings. It will use the data which is available on the internet to provide you with whatever you need. But this technology is now being used across the different functions. I just have some examples here for your interest. So, looking at accounting. So, we're looking at even using Gen AI to create data entries from text, provide commentary. So, till now, what we use the system for is just to make the process touchless where you have numbers. But Gen AI can even help us to provide commentary which is automated by giving certain logics. So that's what we are trying to enable. In FP&A, we are looking at FP&A is financial planning and analytics. We are looking at how we can create real-time insights based on historical performance or market trends, and Gen AI can help us create those statistical models which will help us look at the future. Similarly, in treasury, risk compliance, and in other non-finance areas as well. So just put this page here so that you know that this is the next big thing which is coming up. It has got application across, a lot of experiments ongoing, but it is real. And we might come to a situation where we do not even need to write our variance commentaries, and Gen AI is going to help us do that. Let's keep going. Yeah, now the topic on sustainability. Now, sustainability is, of course, a very big topic. It spans from looking at energy transition, looking at your carbon emissions, looking at green cloud, looking at your organization, looking at child labor. I mean, sustainability has a huge agenda. And recently there was a meeting, I think it was COP28, which again brought up certain targets around carbon emissions, etc. Now, the question is, what is it that the CFOs can do or need to do on sustainability area? Because we can say that, you know what, we need engineers, we need people from HR, and we need some others to take those actions which are coming up. However, the responsibility is now being taken by CFOs, and this is on record. You can go and read even on the internet that for ESG performance within the enterprise, CFOs are taking a leading role. Why they are taking a leading role is because they have one all the financial data into the systems which they understand the best, and they need to now correlate it with the non-financial data. So, for example, if we need to report utility bills, how many units of electricity were consumed by an organization, and then use it to calculate your greenhouse gas emissions, just as an example, that's something which we can enable because we have that information. So we need to bring in the non-financial data and financial data together to make sense out of it. Today, most of these reports only happen annually by companies, and that too only to the extent the regulators want it. And the regulations are changing continuously, and therefore the companies find it very challenging to put these numbers into their annual reports, and the auditors give them a tough time. So that's where the CFOs are playing a role. And hence, considering that, once we have all the numbers inside, we can take care of the ESG strategy, we can help the organization shape it as well. So that's what we have on ESG performance. Let's keep going. I just put down a few areas where, there is an immediate role that the finance teams are playing in this space. One is on the entire reporting and disclosure strategy. We are able to do that in a much better way. And we have that knack of understanding how the disclosures need to be done, what the reporting requirements are, etc. The roles and responsibility definition, what we can bring into a shared services centralized model, what needs to stay with the businesses, etc. So CFOs are advising in this area as well. Thirdly, the framework selection. There are so many frameworks starting from, like I said, we have got TCFD, we have SASB, we have GRI, we have something which SEC is coming up with. We have the Indian Sustainability Board, where the Institute of Chartered Accountants is putting together something. So we are able to help the organization decide the right framework and the one which is most applicable. Other part is the risk management, which is the climate nature risk modeling, important area. It needs statistical tools. It needs certain combination of financial, non-financial data analytics, which the finance professionals are doing very successfully as well. Performance management, what were the targets? Most companies have put their targets by 2050. Let's say they want to be carbon neutral, etc. So we need those solutions and those numbers to be able to see whether or not we are performing as per the targets that we've committed to the shareholders. Then finance plays a great role in that. Let's keep moving. Okay, so coming to the secret sauce of what can make us successful in this world of ever-changing role. So firstly, I would say that there is a need that we have teamwork now. So it's not about having skill in finance. We need complementary teams. So in my team, I would like, somebody who understands ESG. So there is this lady, she's a PhD in climate change, and she's part of my team. Then I have engineers. Then I would have, people, let's say, from manufacturing background, etc. So we need to build a complementary team to be successful, to be able to get the right level of business acumen. Secondly, flexing our style is so important because the situations are dynamic, things are changing, and hence we have to change our working or leadership style in every situation. Maybe it was relevant 20 years ago, but it's much, much more relevant today. Dismantling silos, I see this as a big challenge for the organizations because ultimately, even today, there would be a sales team who want to operate in a particular way, marketing would want to do in a different way, procurement, etc. So we need to help dismantle those silos by bringing in the power of data, information, insights, and getting those threads together. Growth mindset, rather than a reporting and a controller mindset and being a support, we need to change and become a growth generator and continue to reinvent ourselves every day. So this is the secret, I would say. And just interestingly, if you go to the next page, to share some data point with you, with all of this great pressure which the CFOs and other finance leaders are facing, they get great rewards as well. Many CFOs in this new world are becoming CEOs and are getting promoted to general management positions, which probably was not so common years ago. So I would say that it's putting us on the top spot, and it's all good things for finance people. They are becoming the fulcrum and at the center of an organization rather than just being a facilitator or a support. Okay, so that's what I had for you today. I hope you found it useful. I'll hand this back to the team here for, starting the Q&A session.
Thank you, ma'am. It's an engaging session. We do have some questions coming up in the chat box. The first one is, how do you see technology influencing the future of banking infrastructure, and what role can entrepreneur strategies play in adapting to these changes?
So the banking infrastructure, in my view, is all about technology. Let me put it that way. So already we see a lot of technology enablement in the banking infrastructure. The next big thing which I see is coming up is the blockchain. You probably would have heard of it. Very applicable in a banking environment, because then they're able to trace the transaction right till the end. And this is going to enable them to get to the next generation of banking. So in my view, there is different kind of technologies for banking which are coming up, including using the generative AI as well, because banks deal with a lot of repetitive transactions, and we can build in that intelligence through the machine learning and through these other enabling technologies to make it more insightful. I would not say it does not exist today. We are becoming very high tech, but then there is the new era which is coming up as well. So focus on the blockchain part, which I mentioned first, if you would like to understand more about its application in banking.
Thank you, ma'am, for such an insightful answer. The next question is, in the rapidly evolving financial landscape, what key challenges do you anticipate for entrepreneurs aiming to shape the infrastructure of the banking sector?
Can you repeat the question? For the entrepreneurs, you are saying what is it they need to change?
Yes.
Okay. So like we discussed, I think we already spoke about the fact that the banks are becoming more and more technology enablement. Today, we do not see any physical checks. I would say we're seeing most of the payments happening online. I mean, just as an example. So if there is a startup company or you're a new entrepreneur, it is very important to make sure that you have the right level of infrastructure at your end as well. So, for example, um, if you're a company which deals with portfolios, you need to have a treasury management system which links to the bank so that it's easy to talk to and have those interactions, right? Secondly, in terms of the banking infrastructure, I would say that you need to look at how is it that you can reduce your floats and how you can introduce sweeping mechanisms. I'll give you another example. And going back to my days in Nestle, of course, at that time it was very manual. Today it can be more sophisticated. So we had enabled a three-way contract with the bank, the distributor, and the company, wherein the bank could auto sweep the amount once the transaction was done on the sale. So for this, you need technology. Like I said, it was manual at that time. Today, it is much more automated. So they'll get a trigger and they'll be able to auto sweep. It will enable you to improve your working capital as a medium-sized company, etc. So you need to understand the technology and the infrastructure of the bank and make sure that you have the right level at your end to be able to respond to it and to make money as well in the end, because improved working capital, getting money on time, making your payments on time will only help you uh, enable your business better.
Thank you, ma'am, for such an insightful answer. Ma'am, the next question is, could you please highlight some specific example of successful entrepreneur initiatives that significantly impacted and reshaped the banking infrastructure, especially of our country?
Okay, it seems to be a similar question. You are saying something that an entrepreneur did, which has reshaped the banking. Is that what we are saying?
Yes, ma'am. Basically, some entrepreneur initiative taken by maybe an entrepreneur or maybe by a company that has reshaped the banking infrastructure in our country.
Okay. So, one big thing which has happened, and something is, I would say that even the world is looking at India, and it is this entire payment mechanism. The way you can just use a barcode and you make a payment. You don't need any more cash, even for your 5 rupee, 10 rupee payments. So I would say that this was like a big, big revolution in the banking industry in terms of how you link your bank account to a barcode and pay. And again, this has come from a startup. We had somebody who thought of this idea and has enabled this. And I can tell you very proudly that this is something which is probably much, much more sophisticated in India than many, many developed countries in the world. So that's one area. And maybe there could be certain other examples as well. But this one definitely stands out.
Thank you, ma'am. That's definitely true. Ma'am, the
Mm.
next question is, what are some innovative ways to use financial data to identify and evaluate potential business opportunities that it might not be immediately apparent from traditional metrics?
Right. So basically, what we're saying is that what is it that we can use our data to identify and create insights which may not be available from a traditional reporting system, wherein you will probably just get a number and you will get a reason for the variance that, okay, maybe your travel cost went up by 20% due to one or two reasons, something like that, right? Yeah. So on this one, and I think my presentation was all about this data and insights. So the way this works is that you will look at your past data first. And when I say past data, it's not about 1 year, 2 years. Maybe you'll go through a 3 year horizon. You will see the trends. You will see a pattern building up. And then you will try and apply that pattern into the future by applying certain criteria which may be relevant to the situation coming up, and hence predict how is it that the situation can be in future. So that's how it works. So you create that predictability into your system by getting lot of data insights, and you mine that data and then use it to create a future outlook which is much, much more accurate. And over a period of time, if you do multiple simulations, you will be able to create something which is very, very dependable. So these are, like, I would say, very complex algorithms and analytics which are used. However, most of the finance people understand them the best because you know which data to pick up from where, how much, and then bring it, and what kind of trends to calculate, which will enable you to see the future. So, whatever I spoke about, this is exactly what the companies are doing. The companies which are not doing are really, I think, they are getting left behind. So, it's using the past to create a future with certain criteria and assumptions which will make it more real. So because 3 years ago there could be a situation from where you picked up the data may not be relevant today, so you need to even out or negate the impact of that and then take it forward. Only benefit is that because of technology you can convert it into something which can happen at touch of a button. So that's the beauty of the whole thing, once you've done your homework, of course.
Thank you, ma'am, for an amazing answer. The next question is, in your view, what role does customer-centric innovation play in the entrepreneurial strategies for reshaping banking infrastructure?
Okay, a lot of questions on banking. Okay, again, I would say it seems to be similar. So, but in terms of reshaping banking infrastructure, as long as I think it's a similar question. So, probably I'll have to give you. So, in terms of reshaping the banking infrastructure, an entrepreneur, one needs to understand it, needs to understand the framework, make sure they work according to the technology, etc., which are there in the bank, and refrain from making their processes more traditional and more outdated. So as we get into new age entrepreneurs, we should make sure that we use the best of banking infrastructure rather than leaving it as something which is only providing us with support. So I mean, small things, right? That you start a new business, you start writing checks, you start going to the bank. There's no need to go to the bank. You need to understand their infrastructure, make sure that things are enabled in a more sophisticated and a forward looking way, and use them as your partners, not just like a bank. These days, the banks provide you with a lot of benefits and a lot of help as entrepreneurs to be able to set up some of these things as well. I've seen that the banks would support it, because some of the smaller entrepreneurs may not even have that kind of budgets to invest in technology. You can take help from the bank. So yeah, it's just being more aware.
Thank you, ma'am. We have one last question in the YouTube chat box. In the evolving role of CFOs, how do you see finance team actively contributing to the measurement of both risk and performance? And especially, what strategies has Accenture found effective in fostering these collaborations?
What was the last part you said? What strategies?
Has Accenture found effective in fostering these collaborations?
Okay. So absolutely, like we said, the finance professionals are playing a key role, not only in reporting the risk, but in identifying the risk and helping take the right decisions, for the organization. So primarily, if I give you an example, so look at your let's look at something very simple. Look at your entire collections process for a big organization, right? Collections is very critical because it has a direct impact on the cash flows and working capital of a company, right? So if as a CFO, I can understand the past trends of collections and use that to look at how is it that my customers behave to a particular threshold of billing, and how they're expected to behave to the same in future. If I do that kind of customer analytics, I'm enabling, one, controlling a risk of a bad debt, secondly, looking at how is it that I should promote my best customers. So it might look like a small thing, but then you're taking a business decision, you're obviating a risk. I'll give you one more example. Like a consumer products company, they have a lot of cost when it comes to expired stocks, right? Expired stocks is a real cost of any, let's say, a food company, because it's perishable, and most of the time, bigger companies sign up to take that back from the distributors. In order to create the right level of understanding around this expired stock process, numbers, and trends, we will be able to ensure that you can reduce this number extensively, and also look at what is it that's happening. Like, I'll give you an example. Which products are expiring the most? At an India level, at a click of a button, should I be producing less? Should I be transporting less to Kerala, more to Punjab? Just as an example. So these decisions ultimately are not finance, but we are helping the company take those decisions by providing that level of insight. In fact, in Nestle, I used to do that as a sales controller, and we would stop sales in areas where we believe that things could go wrong and it can have an impact on profitability. Not a direct role of a finance professional, but yes, it that's how you work through it.
Thank you, ma'am. So we'll be having no more questions. That was indeed and really insightful
Sure.
Q&A session. So for
Thank
all our viewers, the credit form will be released in the YouTube chat box. Please fill it to avail of the NACs, non-academic credits. It will be closing in the next 5 minutes.
you. Thank you, everyone, and all the best for your future journeys. Great to have you all on the session today. I hope you found it useful.
Now
Ma'am,
we'll be
we
having
just have.
a short presentation of our sponsors for Enterprise 2024.
Okay, should I wait on the call?
Yes, ma'am.
Okay.
As we conclude this remarkable speaker session, we have strong confidence that the insights shared today will prove valuable to all our participants. Ms. Harshita Sabharwal has undeniably illustrated the fundamental aspects of life as well as business, serving as a source of inspiration and motivating us to work harder and smarter. On behalf of the Entrepreneurship Development Cell of St. Xavier's College Autonomous, Kolkata, I extend our heartfelt gratitude to Ms. Harshita Sabharwal for sharing her expansive knowledge and experience. It is an absolute honor and privilege to have had the opportunity to host such a respected personality. Ma'am's willingness to take time out of her busy schedule to engage with our audience is a reflection of her commitment to mentoring young minds for the corporate world ahead. A special mention to our respected principal, Reverend Dr. Father Dominic Savio, S.J., and Vice Principals, Reverend Dr. Father Joseph Kulandai, S.J., Reverend Dr. Father Peter Arokiam, S.J., and Professor Bertram da Silva for encouraging us to pursue greatness and live up to the great Xaverian reputation. I also thank our faculty advisor, Dr. Arup Kumar Mitra, for his leading supervision and support at every step. We extend a sincere thanks to all our attendees for their patience, active participation, and for posing such compelling questions. Last but not the least, I would extend a deep sense of appreciation for all the support, timely implementation, and guidance provided by the members of the Entrepreneurship Development Cell. We owe the success of the session to you. Once again, thank you all for tuning in with EDC. Have a pleasant day.